Crypto markets are on the brink. Investors must act now or face consequences. The Bitcoin industry involves a lot of controversies, and that's something we can all know. Just last week, USDC depegged from its $1 pricing, falling as low as 33 cents on Binance when compared to the US dollar. This was developed in response to the failure of the Silicon Valley Bank. Now that Bitcoin investors are practically at their breaking point, let's investigate what this suggests for the market. Many think that the price of Bitcoin will once again go below $15,000, but the market keeps staying at crucial levels. What will it be then? As we discuss the depeg on USDC this week, let's see the position of the market's breaking points are, examine the stock markets, the USD, and Bitcoin. Welcome to Altcoin Heroes, your most reliable source of cryptocurrency news and predictions. Feel free to subscribe to the channel. We'll upload videos about the latest news, trends, and predictions in crypto. Don't forget to click the notification bell so you won't be missing out or left behind, and be updated. The USDC issuer Circle wants to repeg the stablecoin to the US dollar. In a nutshell, the stablecoin USDC is therefore no longer worth $1. It's nearly a necessary thing to be purchasing USDC now and then waiting for this market to return to its $1 peg, because Circle has stated that they will support USDC and replace any gap. A lot of traders and investors engaged in this activity. On Binance, USDC fell as low as 82 cents as compared to Tether. If this actually does return to the peg, purchasing USDC today with UST may result in a few percent returns. The organization has stated so, but what they say and what they actually do can differ. As a result, the market has been on the verge of collapse recently, with the bears making a full strike. The US government, according to Treasury Secretary Janet Yellen, won't bail out Silicon Valley Bank. So Silicon Valley Bank's crisis actually began here. But Silicon Valley Bank actually possessed only a small portion of the USDC. But still, I think that the public is still going to hear about this news. Many think that the connection itself is what might even prevent USDC from succeeding. But according to various assessments, Silicon Valley, which has failed, accounts for anywhere between 2 and 8%. Thus, we are unsure if they will receive compensation. But despite this, Circle has stated that they will make up any leftover gap for USDC. As a result, more news emerges. The USDC peg could perhaps return to $1 in the future. This has increased market volatility, which is great for traders, because it has caused more panic. Hence, given the current state of fear, we can see in the Crypto Fear and Greed Index graph the precise level that we have been waiting for it to retest. In essence, it's a reading of the market's level of fear in relation to the price. Right now, it just had a breakout and is currently returning to test the downtrend. Although it's a wavy line right now, you can still see that the market has broken out and is returning. As a likely location to locate a market sentiment low, we are looking at a range between 30 and 40. Hence, it is essential that we monitor pricing changes. So, if we look at the underside, we can see that they are continuing to rise. While this reading only ranges from 0 to 100, this won't consistently be the case. Hence, in order to use this particular analysis, we must simply interpret it in the light of the current situation. So we can always take a look back to observe when things are the most severe, what has happened when some major turning points have occurred, and other extremely intense instances that have gone well. We have therefore returned to test the decline. That was fairly likely, particularly after we had the denial at about 60. The other level we were considering because, in the past, we have encountered a few rejections at the 60 levels. It remains to be seen whether we will maintain these high lows or we will retreat a little bit more but maintain a higher low above the June level, which has served a significant bottom for BTC at that 17.5 level. As a result, the market sentiment is currently on track as a result of the just released news. Clearly, market fear has increased. This is about to alter. Last week, we were at fear, but we're currently at neutral. So let's monitor this and observe how much the market sentiment declines after the week and following the BTC pump. The S&P 500 is the most significant one in this movement. Bears taking over, the major announcement of banks collapsing, and other financial news are just a few of the wild situations we've had. Additionally, Fed announcements about interest rates are coming up. So remember this as we move into the future. Now, I know this is an exciting update, but before that, I just wanted to let you know that I would greatly appreciate it if you guys clicked on the like button and pressed the bell over there to turn on your notifications. Done? Alright then, let's continue. But for now, simply the information on the chart regarding the price. We continue to be above the 50% mark of prior support levels from December. Following that, we are still above the second support level of 3,600 as well as the cycle low of October. Hence, we are essentially still over 3,800, close to the 3,900 point level. These are crucial levels. The market should have at least developed from the December low by now, which is a really important position on the chart at this point. Based on the news and emotions in the market today, especially across cryptocurrency, Binance, Twitter, and other social media's view on the market. In addition, given how loud the commotion has been surrounding the bears, it may have been developed from the lower level. The other half of the equation is that this is only the beginning. Hold on, and things will turn out as they should. In terms of how to interpret the data, though, it will be much more challenging to reverse lower prices if there isn't a lot of extreme fear in the air, and if we don't start to see some breakdowns of these key levels, especially with extreme news and market emotion. It really is that straightforward. Dramatic news, commotion, and fear are necessary for inciting people to sell. And if we lose this momentum, the downside pressure will then start to fade. So let's continue to keep an eye on the S&P critical levels, as well as what is happening to the US dollar and the Nasdaq and Dow Jones, which are the main stock markets. As we ended last week, we must now re-enter below the crucial resistance levels of about the 105 level. Perhaps we're simply creating another trigger here to then pump and try to test some of these high prices since we haven't fully broken down from 104 yet. Notwithstanding the rise, it is still believed that this is a bear market for the USD. As a result of the significant decrease in the US dollar, a rally is essentially expected. We now come to Bitcoin, which was the shocking news in this post. It reached roughly $21,000 on March 9th, the day we learned of the collapse of the Silicon Valley Bank. The Silvergate fall, which happened on March 3rd, was priced about $23,000. Hence, on Thursday, we experienced a top-to-bottom loss of over 9%. But after we ended slightly higher, the entire loss for the day was only approximately 6.2%. As of right now, the bar on the index, which represents a sum of all the different markets for the price of Bitcoin, has actually surpassed the peak of that day of immense fear. It needs to close above these levels, in my opinion. Any closing value over 22,000 will be crucial for the bulls. Now that has arrived. We have seen extremely high volatility as well as a decent volume, yet anything can change. But if the closure occurs at or around these levels, particularly above the 50% mark, the intense fear and bearish sentiment we witnessed during the previous week may simply be a great deal of bullishness. I could have been a bit optimistic with my prediction, but looking at the chart closing over 20,400 is what we want to see in relation to the real facts. Then, if we begin to close above all those swing bottom levels around about 21,400, the strong strike to the downside will appear to have been nothing but a temporary setback in a few weeks. I'll wait before responding. We still haven't started the week in the US financial markets, so I hope you follow my lead and avoid getting too caught up in the excitement and drama of what's happening in the market. Let's therefore wait and watch what the banks do in that area. But even so, this is a promising indicator at this point. Before we begin piecing the following several weeks collectively, allow us to put a close on the market first. For the bulls right now, that represents the best case scenario. The ideal scenario for the bears is for this market to crash close to $20,300. Similar to what we discussed with the S&P 500, they want the weakness to continue in this way. Of course, once the US markets are open, all of this could change. To keep driving these markets lower and maybe entering another significant downward cycle, the bears must embrace this. Right now, the collapse of Circle, Silicon Valley Bank, and Silvergate Bank represents the bull's best case scenario. In many ways, this is shaping up to be among the bull's ideal situations. Furthermore, based on what the market is showing us, it is starting to get some traction and shake off the recent uproar. If we're going to see some lower pricing, the bears really need to step up their vicious assault to destroy these markets. As a result of some seriously troubling news, it is beginning to make some higher lows in the near future. Now, let us know what you think. Leave your comments below. We appreciate you for staying till the end. Kindly click the like, subscribe, and notification bell icons if you enjoyed this video. Visit our channel for more coin predictions, Bitcoin, altcoins, and cryptocurrency videos. Have a great day, and see you in our next video.